Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. What a volatile day it has been. We did hit lows of 24,526 or thereabouts, but towards the end of the session, we managed to recover all of those losses. In fact, the Nifty has ended extremely flat, just around that 24,700 mark. So yes, although we did start with a gap down, we saw a 200-point cut, but it has been an over 200-point recovery from the day's low. That means the dips are are getting bought into, but the broader end of the markets continue to outshine benchmarks. Throughout the day, the mid cap index and the small cap index were trading with smart gains. In fact, the mid cap index has ended the day with 0.5% gain, and the small cap index has managed to move in excess of 1% on a day when the benchmarks were pretty weak. In fact, it was a listless close, so to say, but the advance decline ratio, when you look at the breadth of the market, that was in favor of the gainers. 1:1, but tilted in favor of gainers. 1400 advances on the NSE to 1280 declines. That's how the market breadth really shaped up. In terms of sectors, Bank Nifty managed to edge back above that 55,900 mark. Not very far away from its 52-week high, and we of course have the RBI policy this week. Fag end of the week is when we get the decision by the RBI. We'll have to ask our experts whether or not we can retest lifetime highs on the Bank Nifty ahead of the policy decision or not. But sectorally, it was the Realty pack that was taking the lead today, almost a 2 to 2.5% kind of a move there. PSU Banks, they have been witnessing good buying interest, hectic buying activity over the last 2-3 sessions, and today was no different, a 2 to 2.5% kind of an uptick on the Nifty Bank index as well. And FMCG was another pocket that saw gains in an otherwise weak market. What was dragging the market down was global facing sectors like IT, metals, pharma. These were among the sectoral laggards. But in terms of the volatility, that has also shot up. The India VIX index, surged somewhere around 7% or thereabouts. Above that 18 level, if I am not mistaken, on the India VIX. So yes, that does show that there is a fair bit of it's somewhere around that 17 mark. So yes, almost a 7% move on the India VIX index. Aside of that, if you look at the individual movers, then you had names from auto pack that weren't doing all that well today. Of course, the auto sales data came out over the weekend. It was a mixed bag. So in terms of losers, you had Hero Moto marginally missed estimates when it comes to May sales data. Tata Motors, it continues to lag behind its peers like M&M, and the stock, which had been seeing good traction, has off late been taking a breather, and today was no different. The stock was among the top laggards. Tech Mahindra, JSW Steel, HDFC Life were some of the other laggards. On the flip side, on the gaining front, you had M&M, you had Adani Ports, Eternal, and FMCG names, as I said, were in favor today. So Tata Consumer, HUL, sorry, they were among the gainers. From the broader end of the markets, AstraZeneca, CDSL, Yes Bank, these were the gainers. And on Nifty 500, the losers were Niva Bupa after a block deal, MMTC, ITI and Inox Wind. Well, let's get on board our guests for today then, to take stock of where the markets are headed. Ashish Bahety, founder of ashishbahety.com, joining in. Ashish, we managed to recoup most of the losses today, ended pretty flat. IVs have also shot up, right? So what is the options market suggesting? Are we going to see a 500-point kind of a move on the index in the coming days? And the Nifty Bank, what are the chances of it retesting the 56,000 level ahead of the policy?
Good afternoon, Nandita. See, despite of such a high global volatility and global cues, which were very negative in the morning, we still managed to get a very good close. That was an impressive session for the market, I'll say. Bank Nifty did its highest close on a daily basis, and despite HDFC contributing on the negative side, we're still able to close at least a 0.25% on the upside on Bank Nifty. If I'll say about Nifty, yes, there's a negative contribution from Reliance as well as IT sector along with HDFC Bank. So Nifty was more or less flat, but I think the way Bank Nifty is poised and placed it's very impressive. We have seen a good rally in PSU Banks, and some of the private sector banks have started catching up now. So we anticipate, yes, 56,000 is just 100 points away. We are anticipating at least 700 to 800 points rally from here in Bank Nifty. So our target for Bank Nifty for probably for this week is 56,700 for Bank Nifty. Anybody can go long, or anybody's holding long should stay long by keep just trail the SL to 55,600, and the next possible targets for Bank Nifty can be 56,600.
Okay, 56,600 next possible target on the Nifty Bank index. You mentioned that PSU banks have been witnessing a lot of traction, but the other pocket that has been that saw a lot of traction today was the Realty index. Among the top sectoral movers today, Prestige Estates, Brigade Enterprises, these were among the top movers. How would you look at these stocks now? And Puravankara, on the other hand, I beg your pardon, was reacting to numbers, saw a fair bit of downtick. So these three stocks, what are your views on that?
See, many of the realty stocks are still trading below 200 EMA, so there's a huge room for them to accelerate from here also. Stocks like Oberoi Realty is still is consolidating on the lower side. However, DLF and some other stocks have inched up higher. So we are seeing that Realty Pack can do fairly well from here, and now the street is expecting another rate cut next policy. So we might see one more push on the rate sensitive sectors like realty. So our topic remains from the Realty Pack is DLF and Oberoi. One can go long in these two stocks. I think Oberoi is have a very favorable risk to reward ratio from here also. So one can stay long in this sector.
Okay, stay long on the Realty Pack, and some of those names that Ashish mentioned are among the top picks from the real estate space. But another pocket that was in favor today was FMCG. Britannia, Godrej Consumer, HUL, all of them were gaining on the back of an import duty cut on crude edible oil. Now, government has halved the import duty on crude edible oil from 20% to 10%. Of course, reduction of the input price may lead to an increase in margin for some of these companies. Although it is negative for companies like Adani Wilmar, Patanjali, as they are the manufacturers and suppliers of edible oil. But what would you do, on days when we see some bit of uptick on FMCG names? Would it be a good opportunity to actually get out of these stocks, or would you, advise averaging? How would you look at the FMCG universe now?
See, the FMCG universe is well placed, and I think the best sector to look after right now. It's a pretty domestic centric or domestic facing sector, and with a good monsoon, if anybody have a view of at least 3 to 6 months, I think FMCG is a go-to counter. Most of the stocks are well placed and have a good favorable risk to reward ratio. Stocks like Hindustan Unilever or Nestle, they have not contributed much into the rally for Nifty so far. Yeah, so one can go long. I think Hindustan Unilever is one of the best preferred stock right now for us in this sector. Stock is still trading below its 200 EMA. So there's huge room. There's still short covering can happen here. And after that, we can see some long built up position. So the stock is still in the grip of the shorts. It is favorable to go long here by keeping a stop loss of 2320. Our target for HUL is specifically for HUL is up to 2600.
Okay, target for HUL is 2600. Another stock that was making headlines today was Nika. Post numbers were strong, but brokerages have flagged off that fashion business recovery in that would be the key monitorable going forward. It has also suffered some downgrades. HSBC has downgraded the stock to hold. Looking at the stock, it was looking to pick up traction. In the last 3 months, it has managed to give positive returns. In fact, the last couple of weeks also it was doing well. Last 5 days, it had taken a breather. But after today's move, does this signal some kind of a trend, a reversal on the downside, or would you say this is just a blip? Chartically, how is it poised?
See, today's price action was a little of a first reversal signal, and stock is finally able to close below its 20 EMA, which has happened after almost 12 to 15 trading sessions. So I'm expecting some more correction from here. Stock can slip to at least 180 plus level. where I see some support in the stock. So it's trading at 195. It have a trajectory open till 180 zone. So anybody's still holding long, our advice is to exit this stock. But still, the opportunity or the signal to short is not there. It's just a good time to book profits in this stock.
Good time to book profits on a Nika. But another stock that was in focus and was reacting to numbers was Apollo Hospitals. Although it gave up almost all of its gains and ended extremely flat for the day. The numbers were good. In fact, the numbers met expectations. The management has also outlined a fairly aggressive capex plan. They are aiming for higher occupancy levels as well. But brokerages are fairly neutral. Target price ranges anywhere between 6,800 rupees to 8,000 rupees on the upside. The stock is quoting at 6,900. Do you see prospects, to improving here on, or would you say that the stock will be range bound around that 7,000 to 7,200 level?
Yeah. So if you see the weekly chart last week, also it gave a minus, I think 3% close on the weekly charts, and today also, despite of a good number and doing a gap up open, it gave up all its gain and slipped again below 20 DEMA. So that's still alarming. But the thing is, best part of this Apollo Hospital is the stock has made a good base around 6850 zone, and even in today's fall or after the correction, stock was able to hold its 6900 zone. So we are anticipating that it's just a day or so, and the stock may consolidate in these lower levels and may resume its journey from Wednesday or Thursday onwards, and we may see 7200 on the charts again. So one can go long here by keeping a stop loss of 6850 for the immediate short-term target of 7100 and the subsequent target of 7200.
Okay, target of 7,200 on the upside for Apollo Hospital. Um, Talking about the auto pack, sales data trickled in over the weekend. We had M&M that's continuing to outperform. Tata Motors continues to lag. From the four-wheeler pack, if you look at Tata Motors, M&M, and Maruti, which of these charts is looking most appealing to you right now? Because Tata Motors has already seen quite a bit of correction before recovering above that 700 level. Would you say that buying into Tata Motors will continue at lower levels? Has it actually bottomed out? And among the three, which one is looking most appealing to you right now?
The biggest problem with Tata Motors is so much of the global facing stock, and it has such a big global exposure that any black swan event in any corner of the globe can straight away impact the stock, whether it's Europe, America, or China. If we have seen any news of any slowdown in any of these geographies, directly impacts the stock along with the India itself. So it becomes a little notorious at times. So I'll say specifically to the investor to stay a little shy away from Tata Motors. However, from the auto pack, I think M&M have given a very good price action and stellar price action momentum today. Stock is still trading or quoting below 20 DEMA, so there's a big headroom from here also. And specifically with the good monsoon, I think tractor stocks, M&M and Escorts Kubota are the best preferred pick in the auto sector. However, on the two-wheeler side, I think TVS Motors is more preferred compared to Hero Moto. The stock is consolidating on the upper side of its trading zone near 2700, so it has not given up any of its gain. So compare in auto sector, on two-wheeler side, TVS is our preferred pick, and on the four-wheeler and tractor, M&M and Escorts is our preferred pick.
Okay, those are the stocks that are looking most attractive when it comes to the auto pack. But another sector that is global facing is metals, and there is negative news flow around metals. The US has said it will be doubling its import duty on steel and aluminium to 50% from 25% from the 4th of June. Of course, the stocks like Hindalco will be impacted, and we did see all these stocks, under pressure today. In fact, if you look at the charts of Hindalco and a Tata Steel and compare the last 5-day charts, you'll see Tata Steel has, I think it's a 1 month chart that I'm talking about for Tata Motors, Tata Steel and Hindalco. Tata Steel has managed to outperform over the last 1 month. It is up somewhere around 13%. Hindalco has been pretty flattish. So within the metal universe, would you still utilize these dips to buy, especially the likes of Tata Steel, JSW Steel?
So I'll say these are perfect. All the metal packs stocks are perfect stocks for a trading range. These are not perfect portfolio stock, I'll say, because of this cyclical nature. And stock has given a good rally. If I'll just speak about Tata Steel from the lows of 126, stock was able to clock till 165 zone. So it's a good point to book some profits. Anybody who has accumulated Tata Steel in the range of 130, 130 to 140 zone, good time to lock in their profits. However, it's not still not a favorable time to buy in the dips. If the stock is available anywhere between 150 to 153 zone, that will be a good demand zone, and that would be probably a point to start accumulating it again. Compared to, if I'll say, Hindalco, the same story continues. The stock was not able to clock or move up from its 200 DEMA, so there was a good resistance area there. So, a dip towards 600 would be a good point to buy Hindalco. However, we are short on metals since Friday itself. So, on the short side, our short pick is Vedanta. Stock corrected almost 3.5% on Friday trading session. And today also we saw a significant dip during the intraday trading session. So we are short on Hindalco, we are short on Vedanta, and however, we will be buying Tata Steel and Hindalco on the if there's a more significant correction. Yeah.
Okay, that's the view then. Short on a Hindalco and short on a Vedanta, I beg your pardon, and buying into Hindalco and Tata Steel. Just about a couple of queries coming in on our feed. Just thought would get them addressed by you. We have a query coming in from Alex. He has a query on the oil and gas sector, stocks like ONGC and Petronet. He wants your thoughts on how really the stocks are poised from here, because they have given negative returns over the last week or so. Crude prices have been fairly volatile as it is. Do you see any marked improvement in the stock prices? Are you spotting any directional move here on these stocks?
See, on the oil and gas sector, our preferred pick on the long side is Reliance Industries. I think the way Reliance is holding up 14 above 1400 is very impressive. Even today, we have seen a good rebound from the lower level. Stock did slip below 1400 during the trading session, but it was able to manage and close above 1400 zone. So the risk reward point of view, the Reliance is one of the preferred or the most preferred stock right now in this space. One can keep a stop loss of 1380 and can go long for the immediate short-term target of 1490. Compared to ONGC and Petronet, I think ONGC is really well placed. Stock did slip below 20 demo, but I think it's a good support demand zone right now. We expecting a stock to correct till 235, so another 2-3 rupees correction may happen, and stock may start inching again north from there. So one can go long here by keeping a stop loss of 232 in ONGC for the next possible target of 248.
Okay, that's a view on the oil and gas space. But last question really, your thoughts on the insurance space, so to say. Niva Bupa, it has slipped 10% on the back of a block deal today, although it's a recent listing. How are you looking at this stock, going by the limited data that you have? And what are your thoughts on LIC? The stock has seen a good move. Numbers are pretty good. It in fact took up all the other private insurers up with itself as well. So any thoughts on the insurance space as a whole?
See, we are very bullish on the insurance space as a whole. Our top pick remains HDFC Life, SBI Life, and ICICI Pru in this space. Certainly, LIC has given stellar performance post its number. Stock moved 8% immediately after the quarterly update, and even there's a good follow through buying even after that day. Since 28 May, there was a number, and then even last 3 days we have seen steady stock rise from those zones also. Compared to Niva Bupa, it's a fairly, I'll say, recent listing. The price discovery is yet to happen. Stock got listed on 14 November in the zone of 70. I think 74 was the close that day, and still stock is consolidating in that zone still. One should give some time to the stock. However, one if one wants to go long, ICICI Pru remains our preferred pick in this space.
All right, that was about the insurance space. You've already listed out a lot of your picks, but for the rest of the week, anything else that you would like to suggest? In terms of trading bets for our viewers.
See, I think this coming week will be a little volatile, and any one should use this volatility. So any dip in the capital market space, be it BSE, CAMS, or CDSL, should be used as a buying opportunity. Our topic remains BSE and MCX in this space. For BSE, our target, we are still holding our target of 2,900. So any dip can be bought here by one can go long by keeping a stop loss of 2,550 for the immediate short-term target of 2,800 and 2,900.
All right, BSC from the capital market space, that's one opportunity. With that, Ashish would like to thank you for taking out time and joining in and sharing your thoughts with us. Always a pleasure chatting with you, and I hope to chat with you again sometime soon.
Thank you.
Thanks a lot. Well, then we've come to the end of this edition of Closing Bell. It was a volatile day. We did stage a very good recovery from the day's low and over 200-point recovery, so to say. But the broader end of the markets continues to outpace and outshine the benchmarks. Let's see, tomorrow is another day. It's an event-heavy week, given the fact that we have the RBI policy towards the end of the week, and there has been a significant increase in volatility as well, in the implied volatility as well. So you can expect a fair bit of action going forward when it comes to the market. But completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates, and have a great evening. Thank you.